Hey guys, just a short video here of a setup, or lack of a setup really, but a setup that we teach people to avoid at all costs. And I'm talking to day traders. I'm not talking to anything but day traders, people that are in cash, except for between the opening and closing bell is when they're trading in cash every night. So this is PYXS. This just happened today. You had the gap up, but it sold off and it's kind of sideways here at the low of day. Every once in a while we'll get a new member in chat and they'll say something like, oh, well, this is flagging, right? And above this, it could be a breakout. And, you know, if anything, that's, you you look where it opened. If anything, that's a bear flag. But some people will think this is a flag, like a bullish flag. But you have to look at the flag pole, right? Most people are underwater in this thing on the day. Does that make sense? So we call it a flag dragging on the ground, and we'll use this that we put in the chat room. We'll call it FDOTG, just to shorten flag dragging on the ground. And what people do, if you're newer, you think, okay, well, it's in a tight range. If it breaks up out of this range, I'm getting long, right? It's headed back to high of day or whatever. Look what happens. Breaks, you see the volume coming in, almost 1.7 million shares, and the next candle. So 10 minutes later, everybody from that is underwater. Really, 5 minutes later, most people that took this are underwater. So the old flag dragging on the ground is what we've named it. And if you ever have a long base on a crowded stock, a stock that's getting high relative volume on the day, and the base is at the low of day, but you had an earlier spike, it almost never pays off to take these little base breaks to the upside. Hope that makes sense.